We're only 2 years away from 2025, and if you want to make more money, these are the assets that will get you there. Welcome back everybody to my channel, where this week we discuss 15 assets that are going to make people rich in 2025. Now when I say assets, we're not just talking about your typical stocks, bonds, real estate, etc. But of course, those will be on here. Also got some crypto projects that have really good fundamentals, as well as some alternative investments that can definitely make you rich in 2025. And so let's go ahead and get started with number 1, which is Ethereum. We've already discussed this on our channel before, but basically, Ethereum is one of the best bets for making money in the AI revolution. Why? Because many AI applications are being built on the Ethereum network. And second of all, Ethereum has been showing some really strong signs of growth lately, especially in the DeFi sector. In fact, the total value locked in Ethereum DeFi protocols hit a new all-time high recently. So this means that people are starting to use decentralized finance applications more and more often, and this bodes very well for Ethereum. Now, it's no secret that Ethereum is also undergoing its own supply shock right now. Due to the merge, there is a lot less selling pressure on the market, and many people believe that this will cause Ethereum to appreciate in price. The short of it is, Ethereum is one of the most prominent layer 1s out there, and the future looks very bright. Number 2 is US Treasury bonds. Now, there's 2 reasons why I think US Treasuries are a great investment right now. First, inflation is still relatively high at 3%, and yields on 10-year Treasuries are around 4.5%. This means that you can earn a real return by investing in US Treasuries. Second, the economy is slowing down, and a recession is on the horizon. US Treasuries are considered to be a safe investment during times of economic uncertainty, and this makes them an attractive option for investors. Number 3 is dividend-paying stocks. These are companies that pay a portion of their profits to shareholders on a regular basis, typically every quarter. Now, there are a few things that I look for when I'm looking at dividend-paying stocks. First, I want to find a company with a long history of paying dividends. This is a sign that the company is financially stable and committed to rewarding its shareholders. I also look for a company with a high dividend yield. This is simply the annual dividend payment divided by the share price. I typically look for a yield of at least 3%. Finally, I look for a company with a low payout ratio. This is the percentage of a company's profits that they pay out to shareholders in the form of dividends. A low payout ratio indicates that the company has enough money left over to reinvest in itself and grow over time. Next up, we have whole life insurance. Whole life insurance is a type of permanent life insurance that can actually build cash value over time. Now, the cash value is essentially an investment account that grows tax-deferred. This means that you won't have to pay taxes on any gains until you withdraw the money. Now, there are a few things that you need to know about whole life insurance before you invest. First, it can be expensive. The premiums are typically higher than other types of life insurance because whole life insurance is designed to cover your entire life. It also has a savings component. If you die, your beneficiaries will receive a death benefit. The death benefit is a fixed amount of money that is paid out to your beneficiaries when you die. So if you have loved ones who depend on you financially, then it might be worth the extra cost. Next up, we have rental real estate. Rental real estate can provide a steady stream of income, which is why it's so popular among investors. Now, there are a few different ways to invest in rental real estate. You can buy a property outright and manage it yourself. You can partner with a real estate investment trust, or REIT, or you can invest in a rental property crowdfunding platform. Now, each of these options has its pros and cons, but ultimately, the best way for you to invest in rental real estate will depend on your individual circumstances. Next up is fine art. Now, investing in fine art can be a great way to diversify your portfolio and potentially make a lot of money. Now, there are a few different ways to invest in fine art. You can buy physical artwork and hang it in your home or office. You can invest in a fine art fund, which is a type of investment that allows you to buy shares in a portfolio of artworks, or you can invest in an art-related business, such as a gallery or an art advisory firm. Now, like anything else, there are risks to consider before you invest in fine art. The value of art can be highly subjective and difficult to predict. However, if you do your research and invest wisely, you can potentially make a lot of money in the art market. Next up, we have peer-to-peer lending. Peer-to-peer lending is a way to lend money directly to other people or businesses without going through a traditional financial institution like a bank. You can earn interest on your investment by providing loans to others. And if you choose to invest in a peer-to-peer lending platform, you'll need to create an account and deposit funds into your account. From there, you can browse available loans and decide which ones to fund. Now, one of the great things about peer-to-peer lending is that it typically offers higher interest rates than traditional savings accounts or CDs. Next up, we have private equity. Private equity is a type of investment that involves buying ownership in a privately held company. Private equity firms typically invest in companies that are either in financial distress or have the potential to grow rapidly with the right management team. Now, private equity investments are typically made by accredited investors, which is individuals with a net worth of at least $1 million or have earned at least $200,000 in each of the last 3 years. Next up is commercial real estate. Commercial real estate is a type of property that is used for business purposes. It can be used for retail, office space, warehouses, etc. Commercial real estate can be a great investment for people who want to own their own piece of property and earn rental income. However, it is important to note that owning commercial real estate is a big responsibility. You are responsible for making sure the property is well maintained and rented out. You also need to have enough cash on hand to cover any unexpected expenses. Next up, we have collectibles. Collectibles are items that are collected for their beauty, rarity, or historical significance. Some examples of collectibles include stamps, coins, comic books, trading cards, autographed memorabilia, etc. Now, collectibles can be a great investment for people who are passionate about collecting. However, it is important to note that not all collectibles will increase in value. You need to do your research and only invest in collectibles that you believe will appreciate in value over time. Next up, we have early-stage venture capital. Investing in early-stage ventures can be a very lucrative opportunity, but it is also very risky. Early-stage ventures are companies that are just starting out and have a lot of risk associated with them. They may not have a proven business model or a track record of profitability. However, if you invest in the right early-stage venture, you could see a huge return on your investment. Now, speaking of crypto, let's talk about Chainlink. Chainlink is a cryptocurrency that is used to power smart contracts. Smart contracts are agreements between 2 or more parties that are executed automatically when certain conditions are met. Chainlink provides a way for blockchains to securely access off-chain data, and this makes it possible to create more complex and useful smart contracts. Now, Chainlink is one of the oldest and most established blockchain projects out there, and it has a proven track record of success. The Chainlink ecosystem is also very strong, with a large number of key partnerships. This includes major companies such as Google, Oracle, IBM, and Santander Bank. Let's talk about another crypto project, which is Helium Network. Helium is a cryptocurrency that is used to power the Helium Network. The Helium Network is a decentralized wireless network that allows Internet of Things devices to communicate with each other. The Helium Network is growing very rapidly, and there is a lot of demand for helium. In fact, the number of helium hotspots has increased by over 50% in the last year. Another crypto asset that you should keep on your radar is Near Protocol. Near is a cryptocurrency that is used to power the Near Protocol, which is a blockchain platform that allows developers to build decentralized applications. The Near Protocol is very similar to Ethereum, but it has a few key differences. For example, Near is much faster and more scalable than Ethereum. The Near ecosystem is also growing rapidly, with a lot of exciting projects being built on the network. Lastly, we have silver. Silver is a precious metal that has been used as currency for centuries. It is also used to make jewelry and silverware. The price of silver is influenced by a number of factors, including supply and demand, economic conditions, and investor sentiment. Like any investment, there is risk involved in investing in silver. However, many people believe that silver is a good investment for a number of reasons. First, it is a precious metal that has historically held its value over time. Second, it is used in a variety of industries, including jewelry, photography, and electronics. So even if one industry declines, there will likely still be demand for silver from other industries. So if you're interested in investing in silver, you can buy silver bullion, which is the highest purity form of silver. You can also buy silver coins or silver ETFs. That's going to do it for today's video. As always, I want to thank you guys so much for watching and supporting. And like always, see you next week.